Here comes the new recession. Let's start with the basics. There is no evidence that the lockdowns were to stop the spread of the coronavirus. No, this is not an assumption. 10 months after the epidemic, we have data from more than 20 major countries around the world that have tried to lock down in various ways. Lockdowns range from extreme, as in Victoria in Australia, to intermediate, Sweden, to none, South Dakota, and absent. The results are stunning. Regardless of what type of lockdowns was used, there was no significant difference in case loads or mortality rates. In some cases, an excessive crash reduced the spread for a short time. But then the virus came back. Lockdowns can shift the case load briefly from one period to the next, but they do not change the overall caseload over time. Meanwhile, crashes kill. Lack of socialization during an isolation leads to a massive increase in suicide, drug use, alcohol use, domestic violence, and other fatal behaviors. Families are breaking up at best or falling apart at worst due to the stress of lockdowns and separation. Many people with other diseases such as cancer and heart disease avoid treatment in hospitals for fear of transmission and die as a result. There's nothing wrong with simple measures like hand washing, social distancing, and wearing a mask, but there is good evidence that masks don't work either. However, these steps are inexpensive and people easily adapt to them. As a result, the crashes are excessive, useless, and incur a huge social cost. Often they are a virtuous sign for uninformed politicians and the more stupid reporters who provoke them. However, the economic damage they cause is enormous and undeniable. There is an improvement. Annual growth in the second quarter of 2020 was negative 31.4%, the biggest quarterly decline in US history, and the Point Holder National Bureau of Economic Research, appointed for when recessions began and ended, announced in February that a recession had begun. For a moment, nobody doubts this call. Things have improved a lot since then. That's right, the technical recession had ended on June 30. The exchange returned to an all-time high for the S&P 500 and Nasdaq Composite by September. The Dow saw its all-time high last week. Unemployment fell to 6.9% in early November, still high, but a big improvement above the 14.7% unemployment rate we saw in May. Annualized GDP also returned with an increase of 33.1% in the third quarter. This wasn't enough to make up for the drop in the first half, but it was a good start. So does this mean that unemployment is falling, the economy is rising, and stocks are at an all-time high? Does that mean the shores are clean and the pandemic panic is over? Unfortunately not. The Great Business Lockdowns Part 2. We've seen a new increase in coronavirus case loads and deaths. The possibility that several vaccines will be available in the near future is good news, but most Americans will take weeks or months to receive their injections. The vaccine will initially be limited to the most vulnerable citizens. This is good public health policy. Politicians are doing the only thing they know to do. That is to lock the economy. So, are you ready for the Big Business Lockdowns Part 2? You may be ready, but small businesses are definitely not. Businesses were already struggling after the March-July closure and violent protests affecting many cities last summer. Now, most will take another blow. The only thing you can be sure of is that lockdowns destroy small and medium-sized businesses that make up 45% of GDP and 50% of all jobs. Joe Biden's health advisors are the loudest voices in favor of lockdowns. They cannot stop the virus, but they will kill the economy. More specifically, it looks like we are heading towards a double bottom recession. This is when it returns to a second recession following a short recovery after a recession. This was what happened in the early 1980s, when a recession ended in July 1980 and a new recession began in July 1981, just 1 year after the previous recession. There is another factor that will deepen the new recession: mass migration from cities that has been going on for months. Nearly 1 million have fled NYC. Cities are the greatest concentration of talent and wealth generators in the history of civilization. In the cities, you will find writers, bankers, artists, journalists, teachers, students, and ordinary people who have incredible talent on their own and aspire to be creative or entrepreneurial even while working in routine daily work. Talent wants to be close to talent, and creativity acts like a magnetic force that attracts even more talent to come to the city and try their luck. From this talent and creativity, along with a healthy dose of money and competition, emerges an enormous wealth formation that is the main driver of the growth of the US economy and overseas economies as a whole. So what happens if you reverse the entire wealth generating engine? What happens when locks, riots, arson, looting, and increased violence, along with declining tax revenues and disrespectful police, turn our cities into empty lands at best, and killing fields worse? What happens when city schools are closed and children cannot get a proper education? The answer is for people to go. They go out and go to the suburbs, out of town, and even to the country. People are leaving violence-prone cities like New York, Chicago, and Baltimore, and heading to tax-exempt states like Texas, Florida, and Tennessee. This is not just speculation, evidence inside. More than 300,000 New Yorkers made official address change notifications to the US Postal Service from March the 1st to the October 31. Assuming that each address change notification represents a household and there are an average of 3 people per household, this means that the total number of people moved is close to 1 million. And since address change notifications are only available when 11 or more mail pieces are affected, this means the actual transaction count is higher. When cities suffer, the economy suffers. Of course, movers are the most mobile. An example, they have more money and skills than the average citizen. The rest are poorer, less educated, and have on average fewer career options. The poorer citizens will then continue their way through streets filled with homeless, criminal madmen, brutal criminals, and junkies, police bankruptcy, or retiring early and leaving. When you evacuate cities, you destroy the largest economic engines in the country. When cities suffer, the economy suffers. However, the problem is not limited to cities. This migration will hurt growth in the country as a whole. Through supply chains, there is another reason why a second recession is fast approaching. The new recession begins now. Stocks are just starting to get the message. Expect stocks to drop sharply from here. Investors should reduce their stock risks while increasing their cash allocations and obtaining gold. Most of the idea, comment, information, and criticism containing in these videos have been created by Daily News Report. Before making any important investment decision, use the information contained in these videos as a starting point for conducting your own research. If you make any investment or legal decision, it is advised to consult an expert before making this decision.